been great. Company's doing well in these crazy times, and the family's growing. So I've got a little one. I may not have had her when we last spoke. So
No,
it's
no.
been
How old the little one? How old?
she's 6. She's 6. So I mean, we may have spoken this, and I'm not sure, but I've got a first year in college and a junior in high school and a 6-year-old. So it's
Oh,
been great with the being at home. I'm shooting a lot of baskets with her and riding bikes and taking walks. So it's been great.
sort of makes you a different parent when you have them at a little bit older age, right? You have a
Does.
different view because I'm an older parent, right? I have an 11-year-old and a
Okay.
14-year-old, and of course I'm an older parent. I should have kids out of college and I should be a grandparent, but I don't know. I think I enjoy it way more than I would have 20 years ago.
It
Because
definitely keeps you young, because you could be doing a lot of other things versus, out playing basketball in the driveway. So it's been really great. So
all right, well, I just love that we're both wearing our company logos while
yeah,
we're at home. That's pure
yep,
dedication right there.
that
So
is. That
So I
is.
just I'm talking to executives, Brian, around the country, people I know, people I've known that are sort of old friends and or business acquaintances, and really just trying to help bring an awareness to the industry, that being the loan officers and managers who aren't in the boardrooms, who aren't having to make these really hard decisions. And I just want to give you a moment, if you don't mind, and sort of share what's on your plate right now that's high priority, that's going to influence either your company or the industry or both at large.
Well, I think from a company standpoint, I think communication is crucial right now. I mean, what I hear from people, not just our industry, but other industries, that they don't, that they're upset about is they don't feel like their leadership is speaking with them enough and being transparent enough and communicating. And so, we're trying to do a lot of that. I'm doing a couple videos out a week just with different topics, saying hi to our team, and we developed what we call AB Fit and AB Wellness channel in Teams, and it's a whole channel just dedicated to. We've got streaming workouts. We've got kids yoga. We have kids art contests for the kids that are home. Reading challenges. We have my executive coach has come on a couple of times and done webinars for our team, just how to be more effective working from home. We've got a hairdresser that's coming up this week because a big issue for the ladies is they haven't been able to color their hair.
I'm a week
So
away from being in a
yeah,
hat right now. I'm just telling you, a week away and I'll be in a baseball hat.
yeah. So we're just trying to be as connected as we possibly can. The culture is really important for us, so we're doing all kinds of, not only fun things, but ways to be more productive and keep the kids busy, and just different items. The virtual happy hours and lots of things. So I think from a connection standpoint, I mean, I think that's important no matter what industry you're in. And then our industry is facing, a lot of particular issues. And I've been, spending a lot more time than I have been in the past with the NBA, with the CMLA, with our senators in Virginia, talking to the Fed. We've been in this for 23 years. We went through 2008, 2009, and came out stronger. And so we kind of understand what the market looks like and, what needs to be done. And, there's really been, a few issues, and I'll go over them really quickly, and I'm sure you're aware of them. But the first one was the margin situation where people are hedging, and the Fed was coming and buying 50 billion a day in mortgage-backed securities and driving the price up and causing people's hedge value to go down. And so people were having to make serious margin calls, day after day, to a huge amount. And we appealed to the Fed, we appealed to our congressman, and the Fed has backed off of that, buying about 15 billion a day to slow that down and help that situation. So that was kind of a dire situation a few weeks ago, and potentially was going to put a lot of companies, out of business. Fortunately, we're, in a really good liquid position, but we're out speaking for the whole industry and trying to help from that standpoint. So
Thank
the other two big issues, which again I'm sure you're aware, is the advancing issue. If you're especially a Ginnie Mae servicer, which we are, you have to advance the payments if the borrowers don't make them, and the borrowers have no hardship to prove. Unfortunately, back in 2008, 2009. Many of you heard, I'm sure Dave Stevens said, hey, I brought the servicers in. We all had a conversation. We figured out how this is going to work and made it work for everyone versus, it just wasn't done that way and there's no hardship to be proved. And so a lot higher forbearance percentages are occurring right now. So that's an issue. And then kind of lastly, the major issue is just the agencies buying loans that go into forbearance prior to their purchase, which is a big concern for the industry, and getting that getting stuck on your warehouse line and not being able to sell that and clogging up your warehouse line. So in addition to the normal stuff, that you're dealing with in a high volume, or a crisis situation when everyone's trying to work remotely, you have these additional pressures, on our industry, which we're trying to, not only help from our standpoint, from the whole industry, we're trying to get the message out there and make sure everyone understands how important, especially the independents are. I'm sure you know this, Casey, but everyone may not. Last year, 88% of the Ginnie Mae's, the VA, FHA, and USDA loans were done by independent mortgage bankers. Only 12% was done by banks. And that's a huge part of the market. And so, that needs to be protected. So anyway, there's a long answer to a short question.